SPYI took the world by storm as a high income ETF that didn't have NAV erosion. And now I'm answering the question today, how many shares do I have to own in order to be able to replace my current 9 to 5 income with this ETF? And am I anywhere close? Because I doubt that I am, but I'm excited to figure that out today. If you don't know who I am, my name is Spencer. Welcome to the channel. I talk all about income investing, ETF investing, all that good stuff. So if you're interested, don't forget to like and subscribe so you don't miss out on future content. Now, let's roll that intro. Before we get to the fun part, let's look at exactly what SPYI is. It's a monthly payer. We have an expense ratio of 0.68%, which is a little higher than I'd like, but the fund has performed really, really well, especially the last couple of years. So we can offset that. The distribution rate is sitting at 12.19%. That is not the total return rate, as you do have some exposure to upward momentum of the underlying fund, which for this is, of course, the S&P 500. Now, like I said, the expense ratio is a little bit high. Net assets, $5 billion. This is a large fund. NEOS is very popular, so I'm not surprised by that whatsoever. And again, it is monthly. Now, I'm not going to go over all the perks of this fund. You guys have seen me talk about it quite often. A lot of the NEOS funds trade similarly and have similar attributes for these ETFs. So I'm not going to break everything down, but I will say they use the Section 1256 contracts, which are subject to lower taxes. So for me personally, I invest primarily in a Roth IRA, but I am expanding out past just that Roth IRA to exceed, the limits that I can invest in it. And I will be moving my NEOS funds into those because I do pay less on taxes than a lot of my other funds that are not so tax efficient, which is phenomenal. I love that they are so tax efficient. Sliding down, they have good videos. We can see the 1 month, 3 month, 6 month, year to date, and since inception, cumulative value of NAV performance and market performance, it is up 48.87%, which is amazing. On the 3 year, it's averaging a 14.8% annualized, which is wild. Very, very impressed by that. The numbers for this fund speak for themselves. Now, if you guys want to get rich and retire off a fund, this fund has growth, it has dividends. I am going to use it to retire, but it's not one that's going to triple overnight like we've seen with a lot of other, especially the leveraged weekly payers have been going absolutely nuts. SPYI is consistent. It is tax efficient. It is I would call it like a serious investor's fund. It's not one that you look at and check every single day. You know it's working for you. It's doing what you want, and boom, there you go. Low risk, medium reward, I would say. I'm impressed with the return, so I'm not going to bash it by any means. And this is a fund that I ultimately would use to retire off of, which again is the goal for this video. So now let's get into that calculation. Now I want to look at that calculation, but first, there are 5 ETFs that I considered for this, some of which are big winners, some of which are not big winners, but I want to showcase exactly why I chose SPYI. I do hold this one. I'm probably a little bit biased because I already do hold it. I own it. I like it a lot, and it has done well for me. But we have SPYI, we have GPIX, we have iSPY, we have TSPY, and we have WDTE. All of these pay monthly aside from WDTE that pays weekly. What we're looking at is a price return chart for all of these S&P 500 ETFs. And there is a good winner, which is GPIX being up 8.5%. Then we have a lot coming close. SPYI, I'm going to do that 1,000 times this video probably. SPYI is up 3.8%. TSPY is up 2%, and iSPY is up 2.8%. Now, WDTE is down 21.34%, but we also need to factor in dividends because it is a higher yielder than the rest. They also have relatively similar expense ratios. SPYI is a little bit bigger in expenses. iSPY is smaller. GPIX is the cheapest, and WDTE is the most expensive at 1.01. When we look with total return, they actually get a lot closer. But WDTE is still our lowest performer at 11.58%. Then we have iSPY at 13.27%. We have TSPY at 15.57%, SPYI at 16.06%, and GPIX is our top performer at 16.89%. We also can zoom out a little bit farther, but not all of these funds were around at that time. Our oldest fund is SPYI, where it has returned 50.53% since the near inception of the fund in 2022. Now, we definitely can't compare all of these, the newest one being TSPY, although it has had amazing performance, and I'm guessing it's going to continue to have that amazing performance over time. Only time will tell, though. But right now, I am leaning heavily on SPYI in my own portfolio. That's why I'm making this video. It's not just for fun. It is also to see exactly what my goal should be if I was to want to retire immediately, which I don't, by the way. I like to work. Now, GPIX is really performing well. On top of that, not only is it performing better than SPYI, but it also has been performing for less of a duration of time. So I will need to look into that one for sure as well. Maybe a mix of SPYI, GPIX, and TSPY. So this video, I did want to showcase a little bit of these comparisons. I get comments about them all the time. If I'm forgetting any of the S&P 500 ETFs, let me know. I will say, out of all of these, I think WDTE would not be my favorite, and iSPY, just because they've been underperforming. I think SPYI, GPIX, and TSPY will be my top performers. And if I had to do like a 3 S&P 500 portfolio, I would definitely do those 3. I like them a lot, and maybe I am a little bit biased, but I did have Sai Katara, the CEO of Tap Alpha, the creator of TSPY, on the channel, and he gave some amazing info that really, it convinced me. I'm not going to lie to you. He's a ETF issuer creator, but he's a heck of a good salesman as well. So I just wanted to showcase that, give a little premise as to why I'm choosing SPYI. I will likely do this again if you guys like it. So like down below and comment. I didn't know if you know this. If you click the like button, now there's like confetti, like a little woohoo award, thing. So check that out. Let me know if it's actually there or not. But put in the comments which of these funds is your personal favorite, because I'll do more content based off what you guys say. Now we're going to jump into that calculation and see how many shares I need of SPYI by Neos in order to retire tomorrow. Now, before we get into the next part of the video, I'm going to have to be a little vulnerable with you guys, and I don't think I've discussed this on the channel before. Let's talk about my gross income. And for those that don't know, when I say gross, I don't mean disgusting, although it is kind of gross how little it is. I mean gross as in before the taxes are taken out. And I did receive a raise, which is absolutely amazing. But if you didn't know, I'm getting married relatively soon. And yeah, so the raise is gone. It's already been spent. And the next couple months have been spent. And then the next couple years after that. I'm not complaining, though. I'm not complaining. I'm really excited. So what do we need to make $78,000 a year? Well, we have our approximate dividend per share. It's currently priced at $50. Our dividend rate of 0.1219% or 12.19% gives us $6.12 per share. So when I put this in, we're going to divide 78,000 by our 6.12, our amount per share, and that gives us 12,745 shares. Is this enough? What we need for that 78,000 is exactly what? $6,500 per month. So moment of truth. We made it with just a little bit of money to spare, $22 over. So how much money do I need to retire in SPYI specifically? I would need 12,750 shares, which is an investment amount of $640,050. Now, again, I'm not dripping in this scenario because I would be living off of the money. If I could drip some of it and live off of some of it, that would be amazing. But to be honest, the main problem also is going to be taxes. So these are benefited with taxes because of those 1251 contracts. But even if I had a tax rate of, let's try this, 10%, what's that going to do? My 78,000 goes down to 70,000. And I know that my tax rate is probably going to be closer to the 20% because taxes absolutely are the worst. If you're a fan of taxes, unsubscribe. Get out of here if you love taxes. I think I'm safe to say that no one unsubscribed at that point, unless you did just because I'm stupid, which I can understand. So 62,000 after a 20% tax rate, still livable, close. But we answered our question. To get $78,000 or $6,500 in monthly income, I would have to invest $640,050. Lower than I anticipated, but still quite a bit of money, so I've got some work to do. If you enjoyed this video, check out these that are popping up on your screen right now, including the most recent one on the best dividend ETFs with zero NAV erosion. If you want more content like this, don't forget to like and subscribe. Thank you guys so much. I hope to see you in the next video.